Well, good morning or good afternoon, depending on which side of the country you happen to be on. I want to welcome everybody to today's webinar. We will be speaking with the two esteemed lawyers from Green and Spiegel here. But before we begin, I just want to launch into a couple little housekeeping tasks. First and foremost, this is kind of an open Q&A at the end of this webinar. So at any time during the presentation, if you have a question, I invite you to type that question into the question dialog box. Now, if this happens to be the first time that you've ever used GoToWebinar, if you look to the top right-hand corner of your screen, you'll see a little call-out box with a question mark on it. Simply click on that, type in your question, and I will hold them till the Q&A period at the end. Now, if I feel that the question needs to be asked right away in order to clarify some sort of comment, Madison, Ellie, I may interrupt your presentation as gently as possible to get a little clarification point there. Otherwise, my name is Rick Tobin. I'm the CEO of HR Insider, Vanguard Media. I will be the voice in the background that comes in and out here. And like I made the joke earlier to the two of them, I have a face for radio, so I will be in the darkness. So with that, I do want to answer two questions that are always the first two questions asked, no matter what the webinar is. Number one, will I have access to the recording of today's webinar? And yes, within 24 hours of the conclusion today, you will be sent an email to the email that registered for the webinar. With access to the recording. We invite you to share it with friends, family. It makes for a great Christmas gift. The other question that is often asked is, will I get a certificate of attendance or registration that I can use for potentially CE points? Yes, the same email that goes out with access to the recording will also have a certificate that you can use for whichever designation for your continuing education points required. So with that, I'd like to introduce the two ladies here that are going to walk us through the LMIA process in Canada. We've got Ellie Slavens and Madison Kelly of Green and Spiegel. And so with that, ladies, I'm going to fade into the background here. And if you want to get started and tell us a little bit about yourselves.
Awesome, thank you. Hi, everyone, and welcome. My name is Madison Kelly. I'm an associate at Green and Spiegel on the LMIA team.
And I'm Ellie Slavens, and I oversee our LMIA department. Work with Madison every day.
There's lots to cover today, so we'll get through as much as possible. Like you said, you will get a copy of the presentation, and we'll get to some questions at the very end. So, like I said, lots to cover. So we'll talk about what is an LMIA, the different streams, how to obtain an LMIA, refusal to process, so some of the new rules and policies that are in place, the work permit side of LMIA applications, dependent family members, and then hopefully we'll be able to touch on some employer compliance as well. So what is a labor market impact assessment? So an LMIA is under the Temporary Foreign Worker Program. It's one of two programs administered by the Canadian government. It's a two-step process. So the first step requires the employer to apply for what is the LMIA. So you apply with Service Canada or ESDC. And then the second step is dealt with IRCC, which is the work permit portion, allowing a foreign national to work in Canada. So it's a legal basis that can either provide an initial work permit or a work permit extension for a foreign worker who is already in Canada. There are various LMIA exempt work permit categories. So typically we look at work permit exempt categories before switching to an LMIA when we're looking at foreign workers working in Canada. The three streams we're going to discuss today are high wage positions, low wage positions, and the global talent stream. So when determining a stream, we typically first look at the wage. So across Canada, there is a provincial median wage. This determines the difference between a low wage LMIA and a high wage LMIA. They were recently updated at the end of June. So right now, for example, in Ontario, you need to make about, I think it was just under 77,000 per year to be determined in the high wage LMIA stream. Anything paying under the provincial median wage for the role is going to be under the low wage LMIA stream. We'll talk about high wage LMIAs first. So like I said, so it's salaries offered to a foreign worker that are at or above the provincial median wage. There are recruitment efforts that are required in showing that there is no Canadian citizen or permanent resident that is qualified to perform the role that the employer is looking for. These high wage LMIAs can support a work permit for a maximum duration of 3 years. And there is what's called a transition plan requirement, which we will touch on as well. So for transition plans, there's a strategy to recruit, retain, and train Canadian citizens and PRs to reduce their reliance on the temporary foreign worker program, thus not needing an LMIA to support someone. So really, we want to look at the skills that's lacking in the labor market. What is an employer going to do to ensure that they're not relying on the temporary foreign worker program going forward? So that can include, training, different things that foreign national is going to be helping with during their 3-year work permit, or an employer is committing to supporting permanent residency for that temporary foreign worker. That's the high wage, very high level. For low wage LMIAs, it's for salaries that are below the provincial median wage. So like I said, in Ontario, it would be just under 77,000 per year. A low wage LMIA only supports a maximum duration of a 1-year work permit. There are different considerations, including employer obligations and various refusals to process, along with caps on the percentage of low wage temporary foreign workers at a specific work site, which we'll get into the refusal to process. So some of the additional employer obligations under the low wage stream include round trip transportation costs for the foreign worker to arrive into Canada and to return to their country of residence after their work permit, along with a housing requirement. So the employer must ensure that the foreign worker has suitable and affordable housing while on their work permit. You can see some definitions below in the slide here. So suitable is defined as the residence does not require any major repairs, and then affordable meaning it doesn't cost the temporary foreign worker more than 30% of their before tax income. Process to obtain an LMIA. So each job is classified into a NOC, so a National Occupation Classification. So this determines various education levels, what the job duties typically are. Nothing is ever a 100% perfect match, but we would look at the job description provided by the employer to determine the most appropriate NOC for that specific role. This also triggers things such as prevailing wage. So that is the minimum you can pay the temporary foreign workers set out by Service Canada. So there's the provincial median wage and then prevailing wage for the role, not to make it complicated for everyone. So when you work with us, we would be able to advise you on the prevailing wage for the specific NOC that we have identified. We also look at, is there a collective bargaining agreement? So if it's a unionized place of work and the CBA outlines what's lower than the prevailing wage, we would look at the collective bargaining agreement over the prevailing wage that is determined by Service Canada. There's also additional registration requirements for workers that are going to be working in BC, Saskatchewan, Manitoba, and Nova Scotia. And those registration certificates are required to submit an LMIA application. There's also a business legitimacy requirement, which we'll dive into a little bit more under our kind of recent trends within the LMIA world. So if the employer in the business number has received an LMIA positive decision within the last 2 years, you don't need to provide further business legitimacy requirements in the LMIA application. If you have not had an LMIA within the last 2 years, then you need to provide business legitimacy requirements, and I'm going to get into what those look like. But essentially, ESDC is looking at, are you providing a good or a service in Canada? Is offering employment consistent with the reasonable needs of that business? Can the employer fulfill all the terms of the job offer, including the wages for that foreign worker and other financial obligations, and ensuring that the employer doesn't have any previous compliance issues? So for proof of providing a good or service, the employer will need to submit at least one of the following documents. So it includes a municipal, provincial, or territorial business license. It could be a T4 summary of remuneration paid, most recent PD7A of account, which is the payroll document, or other documents that you consider appropriate. Typically what we're seeing is ESDC is really focusing on the top three being kind of written in stone, I would say. Number 4, even though it looks like it's open to interpretation, we have received a lot of pushback. So we try and submit exactly what ESDC has outlined. For foreign-based employers, so for individuals that it's not a CRA business number and your business address and operations are outside of Canada, we look at submitting contracts or invoices for the goods or services that you are providing within Canada. Not as common. And then the second side of the business legitimacy being ability to fulfill terms of the job offer. Again, you'll see the last point saying other documents that you consider appropriate. In our experience, typically they really do focus on the black and white requirements that they've outlined. So for most businesses, we would be looking at a T2 with schedules 100 and 125. So the balance sheet and income statement information, and those need to be within a positive revenue, positive balance sheet to show that you can support the temporary foreign worker.
With enough revenue to cover the salary, so more than the offer.
Yeah. Outside of that, we typically sometimes, if the temporary foreign worker is already working for the business, we can provide T4 payroll records for a minimum of 6 weeks for that temporary foreign worker in lieu of a T2 with those schedule 100 and 125. And the kind of quote unquote last resort is an attestation from a financial institution. Again, we'll touch on this a little bit later, but we've definitely been getting a lot of pushback on that, which we can discuss in a little deeper later.
Yeah.
So there's a recruitment period for both high wage and low wage streams. So once the advertisements for the job have been drafted and finalized, it has to be posted on at least 3 separate sources for 4 consecutive weeks to demonstrate an effort to recruit Canadian citizens and permanent residents to fill the role. So again, we're testing the labor market. We want to see in Canada, are there qualified Canadian citizens and PRs that can perform the role that you're advertising for? Mandatory across all LMIAs for high wage and low wage is Service Canada's Job Bank. So that needs to be posted on Job Bank for the role. Sources that are national in scope for high wage positions, and then there's an additional requirement for low wage positions that specifically when recruiting, you're targeting underrepresented groups. So it could be individuals with disabilities, it could be young professionals, youth,
newcomers
to Canada.
Aboriginals.
Yeah. So all advertisements must be independently posted. So as HR professionals, you know, sometimes if you're posting on, say, LinkedIn, that ad may get scraped on Workopolis, Indeed, things like that. Scraped ads do not count, so they need to be specifically posted on that job board. And we always recommend for anything industry specific that we recruit specifically to that industry. So if there's an engineering or trade website, for example, if you're looking for an HR professional posting on, it could be HRPA, things like that, to ensure that you are sufficiently testing the labor market and where those individuals who are qualified would apply.
Yeah, and then ESDC has further guidance that if you're going to be using all online sources, you know, each source should come with its own unique value. So we don't want them to consider 2 sources that are very similar as one and not representing a unique value.
Yeah. So during the recruitment period, the employer would be responsible for collecting the applications and resumes as they are received, screening those resumes, interviewing individuals who appear to meet the requirements, and they will be required to provide a detailed recruitment summary in the LMIA application demonstrating that there were no Canadian citizens or PRs that were qualified based on the job posting. While it is 4 weeks is the minimum, we do still advise that all advertisements should be posted and active until a decision is rendered on the LMIA application.
Strictly speaking, one must remain active, but our best practice tip is, and for all our clients, is to keep all of the ads live. And sometimes officers will ask for the links and for confirmation that the ads are still active and available to be seen at the time of assessment of the LMIA application.
And they can still ask, so, you know, if processing time is 2 months for an LMIA, they can ask, what have you received in the 2 months that the LMIA has been processing? So you are still required to continue screening those resumes, looking for those qualified Canadian citizens and PRs. There are some variations to recruitment. So depending on the circumstances, the employer may be able to leverage a variation from the mandatory advertising requirements just discussed. So some of these common variations include positions that are for a short duration. So, sending a temporary foreign worker from the US, for example, short notice, it's for less than 30 days. The job does not exist after the temporary foreign worker departs Canada, and there's really no opportunity to train a Canadian citizen or PR just because the position requires specialized and our proprietary knowledge. There's also specialized service technicians and specialized service providers, along with the entertainment sector who are maybe doing, short-term work for a couple of days, a modeling shoot, broadcasting, things like that.
And so another variation that's not really a published variation on the list of variations where recruitment is not required, but where it's known based on policy and sort of ATIP disclosure, is that for executives, where an executive search report is being used, we are able to include, a report from the search firm for a very senior level position, generally where the salary is about $200,000 or more, and usually where the knock is for a senior managerial role, and that can substitute for the other mandatory sources of recruitment for those, very specialized and high level roles.
So the LMIA process and assessment factors. So the LMIA application in most circumstances is going to be submitted online with the LMIA portal unless it is a foreign employer where they don't have a CRA business number and there's no employer contact with a social insurance number. But in most cases, I would say 95%, they're submitted online through the portal. There's an LMIA application fee that is required to be paid after submission. So typically we get them within about 3 days. It's $1,000 per position being requested. Then the application will be reviewed by an officer. So Service Canada will typically reach out to the primary employer contact to ask clarifying questions. So just as we said before, have you received any further applications since submitting the LMIA application? They may dive in deeper about what the role is, how did you recruit, things like that. A lot of the times it's just verifying questions based on what is submitted, but there are some circumstances where if they are unsure of the genuine business need, whether
who's doing the role now,
exactly,
how they've been managing without this person in the position, or sometimes clarifying if it is an LMIA to support an extension, that the temporary foreign worker is already in the role. So actually, we went through a period where there were not these verification calls with all employers, and now we're back into seeing almost every LMIA is having a call, even if it's just a 5 to 10 minute quick check-in to verify that the employer is legitimate and there's really an employer contact who can speak to the application, that that us as the representatives have not just submitted an application that the employer is not aware of the contents completely.
Yeah, exactly. So really what Service Canada is identifying when they're assessing an application is whether the employer made sufficient efforts to recruit Canadian citizens and PR candidates, whether there is a labor shortage that has been established, whether the company is financially able to pay the offered salary. So again, those business legitimacy requirements, and whether the company has a genuine business need to fill the role.
Okay, so for LMIAs in Quebec, things have gotten a little bit more complicated because, anytime we need to do an LMIA in Quebec for a client, we also have to do a certificate of acceptance for Quebec generally, because if the work is going to be more than 30 days, which is in most cases, then there's the requirement to get the joint sign-off with the MIFI, which is the Ministère d'Immigration et de Francisation et de l'Intégration in Quebec. Sorry, that's a bit of a mouthful. So it's a lot of paperwork. We do file the LMIA application with ESDC first and foremost, and that is online through the LMIA online portal generally, unless the employer has an exemption. And then it's supposed to be simultaneous filing with the MIFI's ARIMA portal. So because a lot of the Quebec CAQ forms require applicant information in a much more in-depth level, more like what you would see on the work permit side of things, it does take quite a lot longer to put together the CAQ application. So we gain access to the MIFI, where we kind of do a joint mandat. The employer has to confirm that we're the representative, and then we can submit the CAQ portion, which has both applicant documents and company documents. And all the forms are uploaded one by one, and then we pay for the CAQ, and then the MIFI and ESDC are going to speak together and come to a joint decision after. They may have their own independent questions from the employer, and probably the employer will see questions from both departments separately. That's what we generally tend to see. And yeah, eventually there's going to be a jointly signed off on LMIA decision where there's a MIFI officer, an ESDC officer in Quebec, and then a MIFI officer who is also doing the CAQ portion of the file. And what are we seeing in processing time? It's about, let's say, 2-3 months around there, sometimes longer. It's not quick. So let's see, the next slide. So we used to have a facilitated occupations list. I think it was in the neighborhood of 300 different occupations where there was recognized shortages and employers could completely skip the recruitment stage of the process, and that was known as the facilitated LMIA process for Quebec. The list is updated annually, and more recently it was cut down to maybe like 90 some odd occupations, so it's a lot harder for an employer to be exempt from having to do that recruitment stage up front. So we're now posting quite a few positions in Quebec for roles that were previously on the facilitated process list and didn't have to include recruitment efforts. And there is a transition plan exemption for the first application in an occupation at a work location for an employer, which is nice, but if an employer is coming back to do another LMIA for an extension or has more than one temporary foreign worker in a similar role at the same work location, then they are going to have to put in the transition plan that Madison touched on in a few slides ago. Okay, so the Global Talent Stream is one of our kind of more fun application streams to work on because we don't have to go through that arduous process of screening the labor market, but instead we have to come up with something that's a labor market benefits plan. So this stream was launched in 2007 initially as a pilot project. It's now become a permanent processing stream. There is no requirement to advertise up front and post the ads under the Global Talent Stream, but the same considerations in terms of prevailing wage do exist as with other LMIAs, and then there is an additional wage floor for a few listed occupations that are on the Category B Global Talent Stream occupations list. So the labor market benefits plan, we also have Category A and B, which we'll dive into. Category A is where the employer is seeking to hire specialized and unique talent, so generally $80,000 or higher as a salary, with an advanced knowledge of the industry or an advanced degree in the area of specialization. If the applicant does not have an advanced degree like a master's or a PhD, then as long as they have 5 years of experience in the field of specialized experience, that can substitute. So that sometimes works well, but generally most of the Category A LMIA applications that we're doing, the applicants do have an advanced degree. And what is unique about the Category A stream of the Global Talent Stream is that we have to go and get a referral from a designated partner. So there's a list of referral partners, and some of them are national, some of them are provincial, and the employer basically has to fill out a referral template request where they set out how they're an innovative employer and they have a focus on innovation, and that they're seeking to hire this unique and specialized talent, essentially to scale up their operations. So sometimes we're doing this with tech companies, sometimes we're doing it with, quantum science or,
specific venture capitalist, like very niche.
Yeah, a lot of like new businesses that are launching, and we generally will fill out that referral template, work with the client to complete it, and send it off to the referral partner who will vet it. If they have any concerns, they'll come back. There was a period of time a few years ago where it was hard to get a Category A LMIA or a referral, and there was some pushback. Haven't seen that as much lately. Category B is based on the occupations list, so we do not need the referral as a first step, but the employer has to be offering a position that falls on the Category B occupations list. This list used to be specifically IT focused, but over the years it's been expanded to include occupations like the ones you'll see here with engineering and electrical engineering, mining, aerospace engineers. So
Still
yeah.
very tech,
Yeah.
but yeah, some additions made.
So as long as the offer is being made for one of these occupations, then no referrals necessary and prevailing wage has to be met. And then you can see the occupations with the wage floors towards the end of the list there. And there would be different wage floors for these occupations for Quebec, just as a note. Okay, so speaking about the labor market benefits plan, it's done once as a document that the company and ESDC kind of negotiate together. We help our clients draft an initial LMBP, and then it's revisited as necessary as the years go on. So we have to basically create a proposed document for a new client that's coming and doing a GTS LMIA for the first time. And we need to have at least one mandatory benefit and 2 complementary benefits. So for a Global Talent Stream Category A, LMIA, the mandatory benefit is going to be job creation. This could be on the next slide. Yeah. Okay. And then for Category B, it's going to be an increase in skills and training investments for Canadian workers. And then the complementary benefits can be any of the others from this list. So increasing diversity in your Canadian workforce, a knowledge transfer to Canadian workers, enhanced company performance, although we have seen some pushback on that because all businesses are sort of, built
Trying to increase revenues.
Yeah. And then best company policies and practices. This is not an exhaustive list. It's sort of just a guidance in terms of, what we generally use or what employers tend to gravitate towards as the easiest things to commit to. And a lot of the times it's employers just putting into the format of the LMBP addendum things that they're already doing as a business. So not necessarily new things that they're
Referral incentives
Yeah.
would be one of them.
things that they might already have, in their HR policies essentially, or are already doing. Maybe some smaller
Some
companies. Oh, yes, examples. Okay, so some examples about what the complementary benefits might look like could be increasing the number of Canadians and permanent residents employed full-time and part-time by the employer. So that would be like job creation, establishing or enhancing educational partnerships with local or regional post-secondary institutions or other organizations that support skills and training. So it could be like sponsoring, tech competitions or having some sort of
hackathons, STEM, things like that.
Paid co-op or internship programs. That's a common one that we have our clients have in place, and they commit to that, and they'll set out what the hourly wage will be and how long their internships or co-op placements generally span, and the number of students that they expect to have. Developing and implementing policies to support the hiring of underrepresented groups. ESDC really does like that one. Directly training Canadians and permanent residents is a good one. Or directly supervising and mentoring Canadians or permanent residents. So that would be generally the temporary foreign worker that's the subject of the application, who would be, committed to doing the direct supervising and mentoring, similar with the training of Canadians and permanent residents. That temporary foreign worker would generally be committed to doing something like hosting lunch and learns, maybe 3 or 4 of those per year. And then the specific subject matter of the lunch and learns would be set out, along with who would be expected to participate in the number of, participants.
And I would say these are kind of high level examples. So when we're presenting this proposal to ESDC, when we're talking about directly supervising or mentoring, they want qualitative and quantitative targets. So how many lunch and learns? Is it monthly that you're going to do? How many attendees do you think you're going to have? What are the subject matters? Things like that is what you want to expand on.
Yeah. So generally we kind of outline this for the employers that we're working with. We give them, the structure of the addendum and some example language and some example commitments. They take it back and internally discuss, because it generally involves different departments, talent and what else, hiring. So it's sometimes the bigger the organization, the more people have to be involved in kind of setting out what the commitments are going to be, or that are, the business is comfortable with committing to.
Also the need of temporary foreign workers. So an LMBP would look very different to support one temporary foreign worker versus if you had anticipated hiring 10 within 1 year.
Yeah, because you can make a forecast as part of your labor market benefits plan, where you tell ESDC, look, I think I'm going to come back to the temporary foreign worker program and I'm going to use the Global Talent Stream for 5 people this year. And they'll say, great, that's amazing. We now need your LMBP to be commensurate with that ask. So instead of, committing to hiring 1 to 2 Canadians per year, we're going to want to see you hire 2 to 3 per year over the life of the commitments. And the commitments are going to span 3 years because that's the maximum duration you can get under the Global Talent Stream LMIA to support a 3-year work permit. So your commitments will be set out with, a commitment per year, generally starting the month after you're negotiating the LMBP with ESDC, and broken down on an annual basis for 3 years. Okay, so we also have increasing growth of revenue, and then developing and improving best company practices or policies to attract and retain a Canadian workforce. So that could be like offering a retention or a referral bonus program, for example, or offering enhanced benefits, or having an employee satisfaction survey, for example. And more recently, we've delved into the land of refusal to process certain LMIA applications as the government's become more protectionist. And so we have a refusal to process, and Service Canada will not process LMIA applications from ineligible employers. So that could be employers who are offering services in the sex industry, are on IRCC's list of ineligible employers because they've been found to be non-compliant as a result of a compliance review, or they've been banned from the temporary foreign worker program for non-compliance after an inspection, or are in default of an administrative monetary penalty that's been assessed after following a compliance inspection. Service Canada will not process LMIA applications based on the recent ministerial instructions if the positions are going to be above the cap on the proportion of low-wage positions, or they're for positions that are low-wage in census metropolitan areas with unemployment rates of 6% or higher. Now that's been a drastic change for us. So for example, we have done many low-wage LMIA applications for let's say restaurant industry applicants, chefs and cooks who are working in the GTA. And now in order to retain those workers, the employers would have to pay $36 per hour or higher in order for the LMIA to be considered under the high wage stream, because the Toronto region has higher an unemployment rate than 6%. And so it's impacted by this refusal to process, as are other large metropolitan regions.
I have some sample major cities here that show, most of the major cities are subject to the refusal to process a low wage across Canada.
So these measures are in place for the time being, and in Quebec, they're in place till the end of November. We'll see how things change. The unemployment rates are usually for a couple of months at a time, so they'll reevaluate these
October
9th. 2025. After that, there'll be new rates, but I can't see Toronto coming down below below 6% by October 9th. So effectively, that eliminates a lot of LMIAs where the work location is going to be for Toronto, for Edmonton, for what's also very high here, Calgary, Edmonton. Yeah. So some of the ones that are closer to the 6% mark, maybe there's a chance that will shift and those applications will be allowed again. But for the time being, it's a drastic change that's greatly impacted our clients.
More changes.
Oh yes, LMIA-based work permit applications. So once we've gone through, all of the steps to put in a complete application and get an LMIA, have the interview call with the officer, and we're successful and the client has gotten a positive LMIA, the positive LMIA decision letter is now only valid to be used as the legal basis for the work permit application for 6 months. And that's a big change. It's been 12 months in the past, it's been 18 months in the past. So it's really important to be ready to go to submit the work permit application for the temporary foreign worker. And so we are often collecting and being prepared with the application for the work permit. While the LMIA process is ongoing, we're working on both. And yeah, if the temporary foreign worker is a visa required national, then we're going to be submitting an LMIA-based work permit application online with a consulate outside of Canada, unless it's an extension application. And if they are visa exempt and can apply at the port of entry, then we're preparing a work permit application based on the positive LMIA that will be presented at the port of entry on arrival, whether it be at the airport or land border. And really the onus is on the temporary foreign worker at the work permit stage to ensure that their application sets out for the officer how they meet all the requirements that the employer had said was, were necessary in their LMIA application. So if the employer advertised a requirement for 3 years of work in a manufacturing environment, then our work permit application that we're preparing for the temporary foreign worker has to show, look, they have 3 years of work experience in a manufacturing environment. They have the language abilities to fulfill the duties of the role. They have the education, they've got the bachelor's degree. So it's very important that it's all tied back to the LMIA application, and where we are doing both parts of the process, of course, we have good control and we can make sure that everything is, done correctly, all the T's are crossed and the I's are dotted. But sometimes clients will come to us having already obtained an LMIA with a different consultant, and then they want our help at the work permit application stage, and that's where it can become a little more complicated, because we essentially have to audit the LMIA application and make sure that the work permit is going to be approvable. Did I miss anything?
No, that's everything.
Okay. Eligibility for spouses also has become more restrictive this past January. So it's harder for the spouses of temporary foreign workers now to obtain an open work permit. At one point it was being made more permissive, but now we're shifting in the other direction as the pendulum has swung with all sort of PR and work permit categories lately. So long as the spouse is a common law partner having cohabited for at least a year, or a married spouse, and the principal applicant is going to be getting a work permit that's valid for at least 16 months, then if their occupation is in a skilled tier 0 or 1 occupation, the spouse will be eligible for a work permit. And for some tier 2 and 3 occupations based on a list, they may be eligible. So there's a list, I think there's a hyperlink here in our presentation that you can go to, and I think you provided some examples.
Yeah, we've got some examples up on the screen here. So a lot of, engineering technicians, there's veterinary technicians, landscape technicians. There's a whole list that's published. There's, I would say, over 50 occupations, construction inspectors that would be eligible to have their spouse work. Also important to note is that children no longer, under any circumstances, no matter the tier that the principal applicant is in, they are no longer eligible for a work permit. So dependent children 21 and under can now only obtain a visitor record or a study permit if they're in secondary school or below. Okay, so let's turn to some recent trends. We're seeing quite a few more LMIA refusals than ever before. Our stats are being impacted, but yeah, one main one that's come up as an issue is with staffing agencies or IT companies that are outsourcing resources that will be working on client sites. So a lot of questions about, who is the employer that really has the business need and is creating this business need, and where will the worker be working? Remote work is an issue as well, because we can't really do a high wage LMIA for a fully remote position. And of course, with the way things are with business realities now, a lot of companies have gone fully remote. We have been successful in doing fully remote positions under the Global Talent Stream, and because we don't have to advertise under that stream, it does work well. But still, our best practice tip is for companies to get like a WeWork or Regis office space, even for those remote workforce employees, I would say. And then on the business legitimacy side, as Madison was saying, we have seen a lot of pushback, specifically from banks who do not want to sign an attestation letter, who've been instructed not to sign one for the purposes of the temporary foreign worker program. So a lot of times we've had to be
creative in trying to show other financial documents. And we have received some LMIAs that were refused for insufficient business legitimacy documents, and we're litigating a few of those cases. Do you have anything else?
I would just say most of the major banks, their internal directive is to not provide the bank attestation, pretty much across everything we've seen.
I've still seen some come though.
I've seen a few, but very far in between. And again, a lot of major businesses operate at a negative net income, right? So that is common. And when there is a negative balance on the T2, we have to look at other resources to demonstrate that they have those business legitimacy, be able to fulfill the terms of the job, and they're offering a good or service. So when I went through those lists, there are other documents as deemed necessary. Like Ellie said, we've had some success in those, but in others, ESDC, their pushback can just be, a negative LMIA opinion, which obviously affects the business.
Yeah. Do you think we want to touch on compliance or take questions now?
I think we can maybe get into material and minor modifications.
Sure. Yeah.
So modifications to an LMIA. So as we've kind of gone through, we've talked about the different requirements for an LMIA. So when we advertise a role in support of an LMIA application, we're advertising a wage. Now, obviously, as HR professionals, there may be an annual merit increase every year where that individual's wage would be increased year to year. Under the LMIA or compliance regime, there are certain restrictions that are allowable for an employer to change, a temporary foreign worker's occupation or their wage that don't impact whether that someone needs a new LMIA to support a work permit application, because they're closed work permit based on the location and the occupation and the employer. So in terms of modifications to an LMIA, some minor modifications that do not need to be reported, so are changes in job duties that don't modify the NOC. So the NOC outlines the general duties. Sometimes you're able to get away with changing the position, but it's still under that specific NOC. It can take a little massaging and it can be difficult to do. There's also increasing in wages. So ESDC says it's a minor modification that does not need to be reported if it's equal to or less than the highest of either 2% prevailing wage. So if the prevailing wage for that NOC has increased, you would still need to increase it to meet prevailing wage, or Statistics Canada's average annual rate of inflation. So for 2025, they're using 2.4%. So 2.4% is essentially likely the max that you'd be able to increase per year without reporting. Or
last year was 3.9. So it changes.
It does fluctuate, yeah. So examples of minor modifications that do need to be reported are administrative errors. So if there's any spelling mistakes or a work location is incorrect, that needs to be updated. Change in work location within the same economic area, but no change in work activities or employer. Again, that would need to be reported, but it doesn't require a new LMIA. And then for GTS, change in work location to a new economic region when prevailing wage is still met. So limited, I would say, in terms of minor modifications for wage increases. So you're thinking of when you promote someone, say from an individual contributor to a manager, that would change likely the NOC, would come with a pay raise, I would say over 2.4%. Then we're getting into material modifications that may result in a new LMIA needing to be required.
Yeah, so I mean, the change in employer, the only time that that's really ever going to be okay is if there's maybe an acquisition and there's, success or an interest situation. But of course, you can't change the employer for a temporary foreign worker on a closed employer-specific LMIA-based work permit. And decreasing wages at all, that's a big no-no. No decreasing wages for temporary foreign workers. If their employers inspected in those situations, they'll probably be required to pay back that money and make some other justifications. It could be penalized with administrative monetary penalties. For GTS, generally, because you're not advertising, there's a little bit more flexibility with GTS. but you can't change the wages such that they're below the prevailing wage, and that goes along with the decreasing, mentality at all anyway with all of LMIAs. We should note that when you are making a reporting to ESDC, there's an employer contact center that the employer can call, and there's a telephone number online. But when we're working with our clients, we want to paper the file, and for compliance purposes later, keep a record. So we generally do an ESDC update if it's something that's, a minor modification, or it might be a voluntary disclosure if we're disclosing essentially some non-compliance and coming forward to bring it forward voluntarily in order to kind of minimize the impact later if it's going to be a subsequent employer compliance inspection. So we would send those in writing to ESDC and keep a copy on the file. What else do we want to cover here?
I think it's important to note when you submit an LMIA application, you are describing the hours that are going to be worked each week, the exact duties, the exact wage, benefits that you're providing that temporary foreign worker. So when it comes to, in your HR professional capacity, if there's any change in employment conditions that and they're on a closed work permit for a foreign national, those are always things to bring up to us to discuss to see if it impacts the employer from a compliance perspective or that individual's work permit
before implementing the change. Or even if you're working on the LMIA application and the person's up for, an increase in 6 to 8 months that you're aware of, something to discuss before filing the LMIA, because by the time the LMIA is approved and the work permit that they're on is approved, it could be that, that's when they're going to be getting their increase, and it's already known that they were going to be eligible for it. Yeah. Okay, so if it's selected for an inspection, and this could be because of a random compliance inspection, chances are 1 in 4. We haven't seen that many random employer compliance inspections. There was a period of time where we were seeing quite a few of them. That sort of tapered off, but it could be for reasons to suspect. It could be for, reasons to suspect as maybe there was a complaint by an employee. So that would be not random. Generally, the employer is going to have to produce documents and respond. It could be that they're being inspected on one temporary foreign worker or a group of temporary foreign workers, so maybe 3 or 4 employees at the time. And they're going to have to provide copies of their offer letters, payroll records, and timesheets generally, proof of the benefits coverage and vacation entitlement that the employee had. So generally that would involve going to the insurance provider and getting some documentation, proof of the job title and duties that the worker actually had while in the role. Sometimes that may be us providing a copy of the previous work permit and LMIA application and saying, here's the duties, they're still the same. Or it could be that there's some minor shift and we're justifying that it's still within the same NOC, confirming the work location, providing policies for health and safety, workplace harassment, providing proof of WSIB registration. If they have a recruiter's license or used a recruiter, possibly providing proof that they were following the laws for recruitment, regulatory requirements, and then proof that the business is actually actively engaged and continues to be so. It's not a shell. It's not, a business that was created for the purpose of bringing in foreign workers. And definitely proof that the pamphlets on temporary foreign workers' rights has been posted in the workplace in a general communal area where it's visible in both languages. Documentation related to fulfilling their commitments under their transition plan, and proof of the suitable and affordable housing and transportation costs. So I've had employers that were inspected where we've had to, show the return plane tickets or the reimbursement of flights, provide leases, explain how the company has maybe, subsidized the housing costs or what the arrangements are. So it can get really, very detailed. It can be like 6-7 responses back and forth with justifications. They can be long. Anything that you want to add?
I think it's everything. They really are just making sure what you've submitted on that LMIA application is what you're offering that temporary foreign worker, right? So it's aimed at reducing fraud in the temporary foreign worker program. I think I kind of touched on this. So
Yeah.
these are the types of issues and things that as HR professionals you should think of when you're looking at any foreign national's scope of work or salary. So base salary or if it's salary with bonuses and commissions. So when you submit an LMIA application, the wage that's listed or advertised needs to be the guaranteed wage. So that does not include bonuses or commission or other contingent wages. Currency conversion. So some individuals require hourly wage in Canadian dollars, and it could be in foreign currency such as USD. So making sure that that fluctuating exchange rate is still captured, benefits being offered, as I touched on before, and large salary increases. Those are the standard, I would say, most common issues that our clients come to us with, whether they already are in a situation where they're being inspected or they're contemplating, increasing an employee's salary or giving them promotion and things like that.
And we should note that the prevailing wages data is updated usually in November of every year. So it's an employer obligation to check what the prevailing wage is for the occupation, the NOC of their temporary foreign workers, and if it's increased, that increase to meet that, if they're not already exceeding the new prevailing wage, has to be implemented and in effect by the January 1st of the following year.
So Ellie touched a little bit on this for the pamphlets for the temporary foreign workers. So your rights are protected, ensuring that they're given the pamphlet before their first day of work and make these pamphlets both in English and French available in the workplace. Employers must also provide employment contracts to the temporary foreign workers on or before their first day of work. And lastly, which is very important, no fees related to the temporary foreign workers recruitment or LMIA may be charged to the temporary foreign worker. So this includes recruitment fees, legal fees for an LMIA, and government fees for the LMIA portion. You cannot claw those back from a temporary foreign worker as it is an employer-driven process.
They can pay for the work permit portion of their application. So that would be their $155 work permit filing fee or the legal fees, surrounding preparing the port of entry or the consular work permit application. Most of our clients do pay for both portions of the file, but the requirement is not, not the way it is for the employer-driven process. On the employee side, it's up to the employer if they want to cover the legal fees and the filing fees for the work permit. That's the employee's piece of the puzzle. Okay, so for non-compliance, after an inspection, if justifications aren't meeting, the allowable justifications, or they can't be justified and they're going to be assessed an administrative monetary penalty for non-compliance, then they can be assessed penalties ranging from $500 to $100,000 per violation, up to $1 million cumulative cap per year. They could result in fines, criminal charges, or penalties, bans from using and accessing the temporary foreign worker program in the future, being published on the naughty list of banned employers or penalized employers, and that list is quite long and available to the public. And also ESDC can share information with other government departments about non-compliance, and they can get information if there's some occupational health and safety violations that they should be aware of when they're doing their inspection. Okay, I think we have time for questions.
Yeah.
Not much.
Perfect. So thank you both. I'm just going to jump in quickly for a second here to remind everybody, in order to ask a question, if you're new to go to a webinar, just go to the top right-hand corner of your screen. You should see a little call-out box there with a question mark in it. Simply click on that and type in your question. For those of you that were late comers, I just want to remind you that a recording will be available of today's session within 24 hours of the conclusion, and email will be sent to the registering email. And included in that will be a certificate of registration that you can use for CE points. Now, I'm just going to dive through in no particular order on the questions here. One of the things that you had illustrated was the need for a business to show a steady stream of income, sort of a net profit, a positive on the income statement. But for a lot of companies, and I know this shouldn't be the standard norm, but for a lot of companies, they operate at a loss on a continual year, particularly in tech industry or startups or something along those lines. How is that particularly impacted if, say, you're running a sizable deficit, but still have cash flow?
So that's where the financial attestation comes into play. So if the T2 schedules 100 and 125 do show that loss, either a loss or not even, that could be a positive net income, but just one that's not high enough to cover the temporary foreign worker's salary, then we will need that attestation from the financial institution, which can be tricky to obtain. And again, we're seeing mixed results in terms of whether employers are able to secure those. For the first little while, the attestation was allowed to be issued by, a CPA, and then the requirements tightened, and now it has to be an officer from a financial institution. And that's when we're seeing these, directives to different banking staff to tell their bankers not to issue these attestation letters, but some clients are still able to get them, and that's pretty much what the struggle can be for some of these startup companies and companies that don't have positive net revenue.
We've also seen some success in, if the temporary foreign worker is already working for that business with a similar wage, 6 weeks of pay stubs to show that they have been paying that temporary foreign worker. Or we've also seen if that position is backfilling, for a previous position that was of similar occupation and that individual has since departed, redacted pay stubs to show that they were paying a similar wage.
We've shown some contracts for some people that were vacating a position that were earning a similar wage at a specific level, and that was accepted. It's going to be very officer dependent, and it's also going to, sometimes unfortunately result in a refusal that we might have to litigate because we're in the process of doing that for some clients.
Yeah.
Okay, thank you. Now, for a lot of organizations as well, in the last 5 years have had many remote employees and sort of been global in their hiring. Sentiments have shifted slightly in the last couple of years to bring people into an office space, localize. Is there anything that an organization should be aware of? Are there any hoops, any struggles, any additional paperwork? If you're bringing in, say, somebody that was a remote or a foreign worker, Azerbaijan, just for an example, I don't know, I was just picking any old country, and you wanted to bring them in to work in the office space in Canada, but they're already our existing employee.
So they were remote abroad?
Yeah. Or you just had hired a foreign worker. I mean, they might be a contractor or something along those lines.
So for an LMIA-based work permit, there's no requirement that the person has worked with the business at all in the past. It's often used for completely new hires, and sometimes it's individuals who don't meet the criteria of an intercompany transfer, especially with the tightening rules for intercompany transfers. But the key is there a legitimate business need in Canada that can be demonstrated? And sometimes the STC will want to see contracts or proof of the business need.
They've asked for client lists before for specific.
So if there's going to be an office space in Canada and it's not going to be remote here, then generally it's going to be coming down to the business need and demonstrating that. Hybrid is okay for a high wage LMIA application, as is the policy for many companies to have a hybrid work arrangement. And fully remote, like we said during the presentation, we've really only been successful in doing fully remote Global Talent Stream LMIA applications. And even those we're very careful with when we submit them.
And ESDC, in my experience, and Ellie, you can chime in if yours is as well, they are asking if it's a hybrid role. And what that specifically looks like, right? So if we've declared that it is a hybrid role, they want to know how many days in office is that temporary foreign worker required to go in. They want to ensure that there's a genuine business need for that individual to be in Canada.
And it can't just be a preference, because I think that's what probably this person is getting to. They have an employee that's working in, like I said, I think I picked Azerbaijan. Right, and they are an existing employee that had been working in some sort of remote relationship, and they want to bring them into Canada. Is this a different process? Is it excluded? Do you have to go through the advertising of the job, considering they're already an existing employee?
No, the advertising would be the same regardless. So even for a work permit extension, if it's a high wage or a low wage, there's still an advertising requirement.
They might be exempt from an LMIA altogether. We would have to assess whether that person who's worked for them, because you can be working for somebody by payroll or by contract outside of Canada. And if you meet the criteria of an intercompany transfer, then you wouldn't be getting an LMIA for this individual. So it sounds like that person might need a consultation or assessment to determine whether an ICT work permit, which is LMIA exempt, is a possibility.
Thank you very much. For low-wage LMIAs, what documentation should the employer keep regarding the obligation of reasonable/affordable housing?
So they have to ensure that it exists, and they would, generally be required to produce documentation if requested and on demand on inspection. But if they're trying to keep a compliance file in the event of a possible compliance inspection, then they would want to possibly ask that temporary foreign worker to share their lease and get an understanding of what it includes, if it includes hydro or it doesn't include hydro. And they would need to make sure, before the temporary foreign worker is entering in that lease, if it's going to cost above the 30%, are they willing to offer a housing subsidy, or, is there an arrangement for an allowance or relocation
Stipend
costs or something along those lines?
Okay, thank you. So this particular company has a foreign worker already working for them. The LMIA was done the end of last year and approved for 2 years. When that expires, can they just ask for an extension, or do they have to run through the whole application over again?
They have to do a completely new LMIA application with new recruitment efforts unless exempt, but generally that's going to require recruitment efforts unless it was a Global Talent Stream LMIA. And they'd have to take into consideration everything like
transition plan.
Was there a transition plan before if it was under the high wage stream? Is there a high rate of unemployment? What's the salary? Is it subject possibly to a refusal to process because
a low wage from 2 years ago that they obtained an LMIA for may have a refusal to process? So there would be no legal basis based on an LMIA to extend the work permit.
Okay, great. So how long is that process from end to end then? Because given that it's 1 year in, there's 1 year away from it expiring, when do they need to get started? Don't say yesterday.
It's not too early to start looking at it, with a year left on the work permit.
Especially if it's a low wage with a fluctuating refusal to process for the census metropolitan areas. For example, Halifax before, I think it was July 10th, was under 6% as of the most recent publication. It's now 6.2. So you could get a low wage and now you can't. So, if it is a low wage, you want to kind of monitor that and try and get it at a good time if possible.
Thank you. So do you have or can you offer any insight on the OINP program and the employer's responsibilities in this program?
So that was basically outside of the scope of the LMIA presentation because the OINP program is for permanent residents, and there's a new portal that employers have to register for, similar to the LMIA online where we submit our online applications for employers. But we definitely have a permanent residence department who is expert in that, and they would be happy to set up a consultation for any questions.
Okay, thank you. So again, this one kind of relates to the housing issue. If an employee has already worked for us, they are a foreign worker, but they've lived in the province for several months on their own, what are the housing requirements like?
So if they're not on a company-sponsored low-wage LMIA application, then that wouldn't be a consideration. But if they are on a company-sponsored low-wage LMIA application where the employer had obligations and made some attestations about understanding what must be in place, then that's when we would have to look at it.
Or if you're using a low-wage LMIA to support a work permit extension for an individual who may be here on an open work permit, those housing requirements are still in place for the duration that they're on the LMIA-based work permit.
Thank you. Great. Questions are blowing up here. It's blowing up. How many employees with an LMIA status can a company have? Is there a fixed percentage? Is there best practice?
So there is a cap on the percentage of low-wage employees at a work site, but it's a very convoluted cap calculation.
In most circumstances, it's 10% unless there's an exception, which it may be 20 for low wage.
But I mean, then we have to look at, are there any people in that
can of
work site
worms.
who have applied for permanent residence, have PR in process? A lot of questions sometimes that employers really generally have very little knowledge of in some cases. So doing the cap calculation can be its own fun exercise in itself. But we do have to look at that, yes.
Is that percentage varied depending on the industry? I'm thinking, like agriculture, hospitality, etc. That low percentage, I can see in the real world that not being realistic.
Yeah.
And again, I might have done a typical lawyer thing and asked a leading question. Is that yes, it is industry specific.
If there's 20% is for specific industries is higher than the 10%, which is the general.
Yeah.
Okay. And it wouldn't be a webinar if I didn't throw in a couple of lawyer jokes. So I had heard about changes, or this person had heard about changes to the TFW program. There's been apparently 6 discussion papers from the ESDC for stakeholder consult on those changes. I understand that could lead to potential changes in the program as soon as next year. Do you know anything, have any comment about these changes that are in play?
So changing the temporary foreign worker program, we know that there's a consideration to possibly implement a language requirement on the work permit side. That's not the temporary foreign worker program. But yes, there's always consultations with industry to see how it's working. We have clients that have received, requests on, how their needs are being met with both the IMP and the TFWP, and they're being asked to provide feedback. Those are, frequent users of the temporary foreign worker program. But as for in terms of, what the government will do and update and change, or
day by day.
Okay. All right. So here's an interesting question. I think it's interesting anyways. This company has a temporary foreign worker who is on a LMIA, and that worker is requiring an extended period of time for a medical procedure, say 6 months. How does this impact? Does it require a modification? Do they need to notify anyone? Does that adjust the timeline that's associated with the LMIA?
If they're going to be taking off work and unable to work, for example, and on a leave, then they may be needing to extend their status as a visitor beyond the duration of their work permit if they're no longer able to work.
But that doesn't put their permit on pause.
So the permit would be valid for the duration on the face of the document. And if somebody was on a medical leave during that and there was, perhaps, not paying them what was set out because they were on an unexpected leave, that would all have to just be documented if there was a compliance inspection.
Okay, great. And there isn't need to particularly go out and notify the government or?
Oh, no, there is a need. There is a need to change and notify the government of any changes, material changes to the employment relationship. If there's a breakdown with the employment relationship, if a worker leaves, then yes, then you need to notify them that, they've left the company. But yeah, in terms of just keeping records of the payments that were made, if they were inspected in terms of, how they were paid or they were put on
unpaid leave, or I think it's case by case.
But
right?
yes, that would always be something that the employer would want to tell ESDC that that's happened and notify them using the employer contact center or an email to the STC to advise them of the situation.
Thank you. If a company has been pre-approved for an LMIA, particularly in the low wage category, could the IRCC still reject at any point?
So if they have an approved LMIA and they use that to apply for a work permit, there are situations where it could be refused at the work permit stage, and sometimes that can be from not meeting the requirements that were outlined in the NOC. That's why, Ellie was speaking earlier about ensuring that whatever was advertised for, say, it's 3 years of manufacturing experience at the work permit stage, that's demonstrated that the temporary foreign worker meets the same requirements as listed on the LMIA.
Okay, thank you. So I on behalf of everybody that is muted here and can't speak, they're even further in the darkness than myself. I want to thank you both for this presentation, highly informative. I know that it's technical and there is nuance to every single application and every single organization, but you definitely made it very accessible for me and for everybody. So I appreciate that. So thank you, Ellie. Thank you, Madison. And for those of you that are still online, there are a handful of pre-recorded webinars that have been done with other associates and partners at Green and Spiegel related to immigration and workers and everything associated with that, including some kind of, I remember them saying that this was true to the minute because of the very changing dynamic landscape between the US and Canada right now. But yeah, I want to thank you. I remind everybody that there are additional recorded webinars available and that you will be sent a recording of today's webinar to the email that was registered. That will be sent from bongard.com. So please look for that email within the next 24 hours. And as you can see, there's the contact information for Ellie and Madison. I'm sure they would love to be called and harassed on all kinds of things related to immigration.
Feel free to reach out.
Yeah, at a billable rate. But yeah, thank you both very much. I look forward to doing this again, and I hope that you have a fantastic day.
You too.
Thank you, everyone.
Thank you. Bye now.
Bye.